Hello friends, thank you for tuning into our channel. In this video, we will be talking briefly about financial statements. Welcome to our channel, and for all those first-timers, this is little as 5 minutes, your one-stop destination to learn a new lesson in just less than 5 minutes. The objective of financial statements is to provide information about the financial position, performance and changes in financial position of an enterprise that is useful to a wide range of users in making economic decisions. The basic components of financial statements are income statement, balance sheet and cash flow statement. Let's understand these components one by one. The purpose of income statement is to report the revenues earned and realized by an organization during a given period, and report the corresponding expenses incurred during the same accounting period. The income statement of a company indicates its financial performance for the period. However, the balance sheet is the company's financial statement that reports the assets, liabilities and shareholders' equity as on a particular date. If the balance sheet is consolidated, it just means that the company is a corporate group rather than a single company. Lastly, a cash flow statement is a financial statement that shows a company's cash inflow and cash outflow. The money coming into the business is called cash inflow, and money going out from the business is called cash outflow. Cash flow statement is useful in determining the short-term viability of a company, particularly its ability to pay bills. Now let us understand who are the users of these financial statements. Financial statements are intended to be understandable by readers who have a reasonable knowledge of business and economic activities and accounting and who are willing to study the information diligently. The first category of users are the internal users, that means the owners, managers and the employees. Owners and managers require financial statements to make important business decisions that affect its continued operations. Financial analyses are then performed on these statements to provide management with a more detailed understanding of the figures. These statements are also used as part of management's annual report to the stockholders. Also, employees need these reports in making collective bargaining agreements (CBA) with the management, in the case of labor unions, or for individuals in discussing their compensation, promotion and rankings. The second category of users are the prospective investors, financial institutions, government entities, and media and the general public. Prospective investors make use of financial statements to assess the viability of investing in a business. Financial analyses are often used by investors and is prepared by professional financial analysts, thus providing them with the basis in making investment decisions. Financial institutions, banks and other lending companies use them to decide whether to grant a company with fresh working capital or extend debt securities, such as a long-term bank loan or debentures, to finance expansion and other significant expenditures. Government entities, tax authorities, need financial statements to ascertain the propriety and accuracy of taxes and other duties declared and paid by a company. Media and the general public are also interested in financial statements for a variety of reasons. Let us know how you find this lesson. Was there anything you already knew? Did you find this useful? Do you have any related information you would like to share? Leave it in the comments below, we love hearing from you. And if you liked our video, don't forget to give it a thumbs up and share it with your friends. I bet this would be helpful to them as well. Hit subscribe and ring the bell right now to stay updated on more such little interesting lessons that will matter the most. Stay tuned.